If you don't understand market structure, you're basically trading on hard mode, because not every breakout is real and not every reversal actually reverses. So in this video, we're breaking down CISD, MSS, and BOS and how to use them to identify fakeouts before the real move happens. So let's start with a change in state of delivery, or CISD. A bullish CISD happens when price closes above the opening of a bearish sequence. Now, what exactly is a bearish sequence? A bearish sequence is simply price delivering lower and usually disappears as a series of bearish candles showing continuous selling pressure and downward expansion. So the moment a bullish candle body closes above the opening of that bearish sequence, even if the wick hasn't fully broken above it yet, it can already count as a valid bullish CISD and price may start switching from bearish to bullish. But here's something important. In many cases, bearish delivery happens through multiple bearish candles. But sometimes, before the market shifts bullish, the last bearish delivery may only be one strong bearish candle. If price later closes back above the opening of that candle, it can still form a valid bullish CISD. So what really matters is not the number of candles, but the shift in delivery itself. Now let's look at a few different ways bullish CISD can form so we can better understand how this concept works across different market conditions. The shift can happen gradually through multiple candles, through a failed bearish expansion where sellers lose momentum, through a slower controlled reclaim, or aggressively through a strong displacements candle that quickly shifts delivery bullish. But the important thing is not memorizing these exact formations. What really matters is recognizing when bearish delivery starts failing and bullish delivery begins taking control. Because once a bullish CISD forms, the market is no longer delivering lower in the same way, it could be a sign that the bearish leg is coming to an end. Now, of course, the opposite is also true for bearish CISD. A bearish CISD happens when price closes below the opening of a bullish delivery. In other words, buyers were initially in control and price was delivering higher, but sellers eventually step in, reclaim that delivery, and close price back below its opening level. That becomes the first sign that bullish delivery may be weakening and shifting bearish. And just like in our previous example, this bullish delivery can appear as multiple bullish candles and also single bullish candle before sellers take control. So now that we understand both bullish and bearish CISD conceptually, let's move on to some real charts examples and see what this actually looks like in live market structure. At the beginning here, we can see price delivering bearishly overall. Sellers were still maintaining control of the markets and price was gradually pushing lower. But then notice this move right here. Buyers suddenly step in with strong bullish momentum, pushing price upward aggressively and closing above the opening of the most recent bearish candle sequence. This marks our first bullish CISD. And notice how this point eventually becomes a pivot point for buyers to continue pushing price higher afterward. Now after that, price eventually reaches higher timeframe resistance area and sellers begin stepping back into the market again. We start seeing strong bearish pressure enter the markets and price begins delivering lower once more. Again, the key level we want to focus on is this white line right here, because this marks the opening of the bullish delivery before sellers completely took over the markets and caused this major drop. Eventually, price stops pushing lower and then buyers begin regaining momentum. And the moment this bullish candle body closes back above that opening level, we get another bullish CISD. After that, price continues trending bullishly and expands much higher. But eventually, price rallies into another resistance area and starts showing signs of weakness. Buyers begin losing momentum, sellers step in aggressively, and price starts delivering bearish once again. And once price closes back below that opening level, we get bearish CISD. And as you can see from this example, understanding CISD is actually very important, because many times a CISD can mark the beginning of a major pivot points in the markets where price starts shifting from bearish to bullish or from bullish to bearish. It gives us the first clue that the current delivery of price may be changing, often before the larger expansion move even begins. But of course, not every CISD leads to a full reversal. Now let's look at an example where a valid bullish CISD does not lead to a sustained bullish reversal. Starting from the left side here, we can clearly see that the market is still delivering bearishly overall. Sellers are maintaining control and price continues creating lower lows and lower highs. But eventually buyers step in around this area right here and manage to push price higher. And once this bullish candle body closes above the opening of the previous bearish delivery, marked by this white line here, we get a valid bullish CISD. But now notice what happens next. Even though price reacts bullishly for a short period of time, buyers fail to create any strong continuation of bullish expansion afterward. Instead, sellers quickly step back into the markets, regain control, and push price even lower afterward. And this is exactly why context matters. A bullish CISD alone does not guarantee that the market is fully reversing bullish. Sometimes it only creates temporary reaction before the original trend continues. Which means if traders entered long immediately after seeing this bullish CISD form, there's a good chance they could have been stopped out afterward. And this is why traders don't rely on CISD alone for full confirmation. We still need additional confirmation to know whether the market is truly shifting structure. And that now leads us to the next concept, market structure shift or MSS. And if you've been learning something useful so far, make sure to leave a like and subscribe because I'll be making more beginner-friendly trading breakdowns like this in the future. Let's first talk about a bullish MSS. A bullish MSS happens when the market begins shifting from bearish to bullish by reclaiming and closing above a previous swing high. Now this is very different from a bullish CISD. With a bullish CISD, price only needs to close above the opening of the bearish delivery. But for a bullish MSS to be considered valid, price must actually close above the wick of a previous swing high. In other words, the market is no longer just reclaiming bearish delivery internally, it is now beginning to break the previous bearish structure itself. And the opposite is true for bearish MSS. A bearish MSS happens when the market begins shifting from bullish to bearish by reclaiming and closing below a previous swing low. Again, this is different from a bearish CISD. With a bearish CISD, price only needs to close below the opening of the bullish delivery. But for a bearish MSS to be considered valid, price must actually close below the wick of a previous swing low. That shows the market may no longer be respecting the previous bullish structure that maintained the uptrend. And one thing I want you to notice is that many times a CISD actually forms before the MSS happens. The CISD acts as a first warning sign that delivery may be changing, and then the MSS provides additional confirmation that the market structure itself may be shifting direction. However, in some cases, strong momentum can cause both the CISD and MSS to happen almost simultaneously through a single displacement candle like this. Now, if you're wondering what a swing high or a swing low actually is, it's basically a turning point in the markets. A swing high is usually formed when a candle's wick sticks out above the neighboring candles around it, creating a visible peak before price starts reacting lower and forming a bearish leg afterward. And a swing low is simply the opposite. A candle whose wick sticks out below the neighboring candles around it, creating a visible low point before price starts reacting upward and forming a bullish leg afterward. Now, the color of the candle itself doesn't really matter. A swing high or swing low can form on either a bullish or bearish candle. These swing highs and swing lows are very important in market structure because MSS is based on whether price can successfully reclaim and close beyond these key swing points. Now, before we move on to real chart examples, I want you to take a look at these two illustrations and see which one shows a valid bullish market structure shift. Pause the video if you need to and try identifying it yourself first. If you picked illustration number 1, you are correct, and the reason this is a valid bullish MSS is because price successfully closed above the previous swing high with its candle body, not just the wick. Now, to be fair, a bullish CISD actually forms in both illustrations because bearish delivery was reclaimed internally. However, a bullish MSS only happens in illustration number 1 because price successfully breaks and closes above the previous swing high, giving us stronger confirmation that the overall market structure may now be shifting bullish. And because of that, continuation to the upside becomes much more likely, making this a stronger environment for potential long setups. Whereas in illustration number 2, the state of delivery may have shifted bullish temporarily, but price failed to close above the previous swing high. So there's still a possibility that this move is simply a liquidity sweep or short-term reaction before price continues moving lower afterward. And that's very important, because unlike CISD, MSS requires confirmed candle body close beyond the swing level. This tells us that market may no longer be respecting the previous structure, and buyers could now be starting to take control of the market. Alright, so now let's take a look at how CISD and MSS can work together in a real market structure. Starting from the left side here, we can see that price was generally delivering bearish overall. Sellers were still maintaining control of the market, and price was struggling to create any meaningful bullish continuation. But eventually, buyers began stepping in around this area right here. And notice the smaller white line I marked here. This is our bullish CISD. Price managed to close above the opening of the previous bearish delivery, giving us the first sign that bearish order flow may be weakening. Now notice something important here. After the CISD forms, price does not immediately explode bullish yet. Instead, the market spends some time consolidating and building structure. This is important because many beginners expect the market to instantly reverse right after CISD forms. But many times, the CISD is simply the early warning sign. The stronger confirmation comes later, and that's exactly what happens here. Eventually, buyers gain enough momentum to push price above this major swing high right here, which I've marked with this larger white line. And once price closes above the wick of that swing high, we officially get a bullish MSS, which changes the market structure from bearish to bullish. Now, one way to trade it is we place a limit order at the order block with stop loss below and target with at least 2-to-1 risk to reward ratio. Now, before we move into breakout structure, let me know down in the comments what trading concept you'd like me to break down next. Now, so far we've mainly talked about CISD and MSS in the context of potential reversals. But what about trend continuation? That's where breakout structure or BOS comes in. Unlike MSS, which focuses on the market potentially shifting direction, BOS is usually used to confirm that the current trend is still continuing. For example, after market shifts from bearish to bullish, as confirmed by the CISD and MSS, price may continue creating higher highs and respecting bullish structure. Every time price successfully breaks above a previous swing high and continues expanding upward, that can be considered as a bullish breakout structure. But just like MSS, a BOS only counts if the candle body successfully closes above the wick of the previous swing high. If price only wicks above the level but fails to close beyond it, then the breakout structure has not officially happened yet, and it could simply turn into a fakeout or a liquidity sweep. The same idea applies in reverse during bearish trends. If price continues creating lower lows and successfully closes below previous swing lows, that becomes a bearish BOS. In simple terms, MSS is usually associated with a potential shift in trend, while BOS is more associated with continuation of the current trend. So now let's look at a few examples to understand what BOS actually looks like on a chart. Let's continue using the same chart example from earlier. Previously, we identified the bullish CISD first, followed by the bullish MSS once price closed above the major swing high. But now I want you to pay attention to what happens after the MSS forms. The market starts consistently creating higher highs and respecting bullish structure afterward. In this case, the breakout structure happens after the candle closes above the swing high, making the last two bearish candles before the expansion to be our order block. So once this occurs, how we want to trade it is to place buy limit order at the order block with stop loss just below it with minimal 2-to-1 risk to reward ratio. And once again, price continues trending higher, and every time price successfully closes above a previous swing high with a candle body, that becomes another bullish BOS. So in many cases, the sequence looks something like this. First, we get the change in state of delivery, then the market structure shifts confirmation, and finally multiple breakout structure confirmations as the trend continues expanding in the new direction. Now let's look at an example of how we can combine all these three concepts, CISD, MSS, and BOS, into an actual trading idea looking at the AUD-USD pair. Starting with this first chart here, we're looking at the daily time frame. And one thing I always pay attention to on the higher time frame is the BD arrays, especially important liquidity levels and swing points. In this case, notice how price is pushing upward towards these previous swing highs right here. We have the more recent swing high, and above that we also have an older swing high. Both of these highs contain resting liquidity because many traders place stop losses above them. So naturally, price becomes attracted towards those levels as the market seeks liquidity. And notice how price eventually pushes above both highs, taking the liquidity resting above them. If we focus on what happens to price after the liquidity sweep at those swing highs, we begin seeing signs of weakness enter the markets, and price starts reversing aggressively downward. Eventually, we get our bearish CISD over here, and this becomes the first indication that bullish delivery may be weakening and that sellers could now be stepping into the markets. So for more aggressive traders, this is an area where they may be looking for potential short entries with their stop losses placed above the recent liquidity sweep highs. But remember, CISD alone is still considered an early indication. The stronger confirmation comes afterward. Eventually, price continues lower and closes below the most recent swing low, giving us a bearish MSS. At this point, the market is no longer respecting the previous bullish structure, giving us stronger confirmation that price may now be shifting bearish. A more conservative trade idea would be to wait for price to retrace back into the order block, which was previously supporting price before the breakdown. But after the MSS forms, that same area can now potentially act as resistance. Traders can then look for bearish confirmation from that area, place their stop loss above this level, and target at least 2-to-1 risk to reward setup. And finally, as price continues creating lower lows afterward, we begin seeing bearish breakout structure forming as the downtrend continues. This gives us further confirmation that the market is likely to continue moving lower. So naturally, instead of looking for longs, we now want to be looking for potential short opportunities, preferably during retracements into premium areas like this fair value gap right here. And as we see, price eventually retraces into the imbalance before continuing lower afterward. And this is where all these concepts begin working together. CISD gives us the first indication of changing delivery, MSS confirms the shift in market structure, and BOS helps us continue trading in the direction of the new trend. So hopefully after this video, you now have a much clearer understanding of the difference between all three, and more importantly, how they work together in actual market conditions. If you found this video helpful, don't forget to leave a like and subscribe because I'll be making more trading breakdowns like this in future videos.